Then in other corporate news, Uber shares are down after London's transport regulators said that the company is not fit and proper to hold a private hire operator license. Uber immediately said that it would appeal and that process could go on for months, but that stock is down by about 4.6%.
Joining us right now to talk about all of this is Imran Khan, CEO and co-founder of Verishop and the former chief strategy officer at Snap. And it's nice to see you again.
Hi, good to see you.
I want to start this conversation by talking about this Uber news this morning, given that you've lived in this digital world for quite some time. It's surprising to a lot of people, but what do you think happens here?
I'm not expert on what's going on in Uber, but I think there are two interesting trends we're seeing in general. Number one, that as tech economy becomes a bigger part of the overall economy, there are obviously more scrutiny by government regulators all over the world, right? And when I was at Snap, I had to spend a lot of time with a lot of government organizations and things like that, and I think it's a new way of life.
Right. Can I speculate for a second that as the stock drops and continues to drop we're at 28.23 now, think about where that stock was at the IPO price, whether you think an activist will ultimately emerge. The reason I mention that is Uber, unlike virtually every other unicorn that's gone public, if you remember, because of the Travis Kalanick situation, went to a one share, one vote system, right? Every other unicorn that's out there, including Lyft, everybody else, has dual class. So you can't do anything about this. The question is, do you think that this opens themselves up to an activist? And I'm not, but the flip side is, I'm not sure what an activist would do, which is to say, if you came in there and said, okay, run it for growth, because we don't think you're growing fast enough, then you got a cash problem. We talked about the reverse, which is run for cash, but then I don't know what kind of multiple you get because you don't get the growth.
I spend most of my time operating an online shopping site, so yes. I'm not the expert on this topic.
The reason I ask is because you did spend a lot of time on governance when you were at Snap.
Right.
And there was a decision made, obviously, to have a dual class there.
Yes. And, I think one of the things is that every company has to make their own decisions. And, I think a lot of times the way we made the decisions of dual class structure, our decision was not like, less vote means that we're not hearing to the shareholders. We were actually listening to the shareholders, but given the Snap's long-term goal, it made sense to protect the companies and from short-term thinking.
Right. If you were an investor, would you invest in Uber right now?
I probably wouldn't. And I think you asked a very interesting question about Uber, and it made me think about this. I think the problem with activism in a company like Uber is that I don't think activism could help you with regulation. It could help you with governance. It could help you with financial engineering. It could help you with strategy. In terms of government, I think it's very, very difficult. And I think you're absolutely right. There's no question in my mind. Tech largely was, I would say, largely protected, or mainly because it was off the radar. But as far as government regulation is concerned, it's not true now. The lobbying efforts of technology companies are ramping up very, very quickly. And to answer your question directly, Uber, I would say it scares me a bit because I think that
Does Uber scare you more than Lyft, though? And the reason I ask is because they're basically in the same business, except that Uber gets all of this attention for...
It's bigger.
It's bigger, but also clearly there seems to be underlying problems that continue to persist.
No, I don't know enough about it, but I would say that the larger company gets
alleged
the most
problems.
Yeah. Look, I think in general, the technology companies are becoming a big part of the overall economy, and they're impacting everyone's life.
Right.
So I can't really specifically comment about Uber, but I think what the trend that we're seeing, even we are a small company, we need to be much more careful about government regulations and GDPR and things like that. And then I think that's a new way of doing business. I think 15 years ago, if you were a startup, you would get a lot of free pass and people would not give it to you anymore.
Can I pivot topics on you for just 1 second? Because the other big news of the morning is this LVMH. I mean, we had a lot of deals. We have the TD Ameritrade transaction with Schwab. We also have this LVMH deal. But you're in the retail space now.
Yes.
This is your
world. I have
world.
a lot of thoughts on it.
But the thing that I've been thinking about is, in some ways they were forced into this deal, right?
So here,
forced into this deal because of the margin compression that's taking place in this space.
You were absolutely right. One of the most interesting trends I have seen since we launched Verishop is that we are now seeing a fragmentation of brands. It's very similar to what happened in the media industry. So think about it. 20 years ago, you wanted to be a content creators, actors, or newscaster, you had to go through these big media outlets.
Right.
And then these bloggers came along, then YouTube came along, Snapchat, Instagram, they fragmented the market.
Right.
Same thing is happening in retail. Everybody is building brands. And if you look at in my site, 70% of my revenue is coming from discovery brands. So all new brands. And all these brands are really eating up the shares from these big brands. Consumers' loyalty for these big brands has going down dramatically.
Give me an example. What are some brands that these new brands you're talking about?
So I'll give you a perfect example. So we recruited these two talented executives. One named Rex Cho, he came from L'Oreal, and the other is Justin Liu, she came from Reformation. And we built two brands, one called Ghost Democracy, check out ghostdemocracy.com,
okay.
and billyofficial.com. And both of those two brands are the best-selling brands on our site.
These are skincare products.
Skincare products,
yep.
doing so well, incredibly well. Rex built an amazing product, and it's getting great, accolade, and they are beating up some of the bigger brands.
But what is the cost? But the flip side is, I imagine you're not making money yet, right?
Like, the 6 months in the business.
You're 6 months into the business, I know. But this is the issue. To acquire customers is very expensive right now. Right? Outrageously expensive.
I think that's why we created Verishop, right? Because the thing is that you have all these new brands are coming up, and they're all building brands, but it's very hard to scale. So you need a brand discovery platform. So what is Verishop? Verishop is a brand discovery platform for all your lifestyle need. And that's what we're doing. And I think that we can help people discover new brands.
I would just say from a macro perspective, somebody who looks at things from the top down, one of the problems is you have a free cost of capital that's been created by the world's central banks. And so this is one of the, you can create a lot of brands, there's an awful lot of supply, and one of the ironies, it seems to me, about financial repression and what the central banks have been doing, which has largely been designed to get inflation up, is that it's keeping inflation down. You have more and more brands, you have more and more access to capital. It seems to me very hard to get any sort of real pricing power. You can create brands, you can get followers, but it really comes, one wonders at what point you get the scale to actually have some pricing power.
I think, you're right. I think the market is incredibly competitive. But I think also what's happening is that the millennials are very different than my parent generation. My parent generation had a very strong brand loyalty. And Nielsen came out this interesting study, I don't know if you guys seen that the consumer loyalty to brands are going down dramatically. And that's a real problem. And that's why I think some of these big brands are going to have a really, really hard time. Unless they build a product that consumers really, really love and they continue to use it, you're going to see the problem. Same problem you saw in the media industry, right? And same thing happening in now retail.